Is Ethereum on a fire sale, and could the market be setting up for something pretty good? We'll take a look at it today. You don't want to miss it. Let's just jump right into it and take a look at the chart. Of course, as we are recording, ETH is now dipped under 3,000, holding it at 29.89 on the daily. We'll continue to look at this because obviously this is a big momentum shift from what we've seen in the market over a little bit of time. And one thing around the Ethereum ecosystem that we continue to watch is what's happening in the digital asset treasuries. We wanted to bring on one of our partners, and of course that is Mr. Charles coming in from BTCS. How are you, Charles?
Good, Paul. Thanks for having me back.
Yeah, you're like a regular now, so it's good to have you kind of settling the markets as we start to see a lot of activity happening right now. I wanted to kind of go to a couple of points. One is, first of all, privacy tokens have started to shift a little bit in terms of popularity. This was over from one of the guys at Bankless. They were talking about this in terms of Zcash kind of jumping up, which kind of had already started to see a little bit of activity. But this could be a little bit of a play on Ethereum. Do you think the shift from Bitcoin to privacy, because we know a lot of these Bitcoin whales are starting to move into privacy tokens, do you think that is going to be a benefit to Ethereum long term?
We'll see. I mean, I think privacy tokens are kind of its own, they're their own unique coin, right? I mean, obviously, stable coins with the Genius Act is going to be huge on Ethereum. The ability to have private money, I think, is really important.
Yeah.
I think that's kind of at odds a little bit with regulation. So we'll see how this plays out over time. I mean, there was Zcash, and there was a bunch of other privacy tokens that were very big some years back that are regaining some steam. So I think time will tell. Overall, I remain highly bullish on Ethereum, whether it's stable coins being built on that or privacy layers being added.
Well, I think the point is that this kind of helps foster up the ecosystem of what Ethereum has been built on, to the point of, especially to the point of Zcash. Other things that are happening right now that are more macro-centered, of course, is the news right here where banks are now borrowing another $50 billion. Let me kind of zoom in on that for you. $50 billion from the Fed standing repo facility. This, of course, was a pretty alarming data point that came across, and of course, it was kind of an emergency meeting. What do you make of this? Is this something that we should be looking at and be concerned about?
Well, I think the markets have softened, right? Labor markets are weaker. I expect we'll probably get a Fed rate cut in December. So as markets weaken, the environment becomes really risk off, right? And I think we're seeing that through a lot of tech companies. Definitely all of the crypto companies are taking a hit. And it's just a cycle, right? We've seen these cycles in the past. Whether this is near the bottom will TBD. But I don't think the economy's softened, but it's not in a terrible position.
All right. So you mentioned rate cut December. Well, if you look at the Polymarket data today, it was edging back up to where it might be no rate cut, even though it's at kind of a basically flip a token and figure out if it's going to happen. But you're thinking we might get a quarter basis point in December.
Yeah, I mean, obviously no more than that, but I think that's possible. We'll see though. I mean, you've got the data right there. I mean, that's a pretty good indicator of where the pulse is, where everybody's.
It's on a I don't know is what everybody's saying. Everybody's saying, I don't know. And I'm a little bit worried because it's now going head to head with no change in a quarter basis point. And remember, we got this meeting. Then, of course, we go into January. I think it's the 28th. And then we skip February and we roll into the March meeting. So this is a very critical point for the Fed, especially going into 2026. I think this is the thing that is going to be critical for how do the markets actually react to it. MicroStrategy down from what was a high at around 456. This was back in July, holding right now at about 190. That obviously is a pretty big shift in the dynamic of what Saylor's doing. Strategy adding 836 million in Bitcoin. So continuing to scoop up, and we didn't really see much of a movement on the market. If you saw this kind of move on Ethereum, you would think the price would react. Why do you think that has been the case?
I think it's the same thing. It's just risk off, right? Investors are going to play the market versus looking at the long-term fundamentals. And so I think that's a big function we have to look at is investors aren't going to say, hey, we believe in Bitcoin in the long run. We're just going to buy and hold it.
Right.
Now that it's been institutionalized, both, really all the big cryptos, whether if there's an equity wrapper around them, whether that's an ETF or a DAT, right. I think these typical 4-year cycles that we would see around like the Bitcoin halving or the alt season, that's kind of gone, and now it's just more of a macroeconomic event of, is it risk on or is it risk off? Where are the institutions putting their money? Where are they cycling it out of? And that's what's going to move the needle. And so I think that's what we're seeing in the crypto price.
That is definitely a shift in theory for crypto, because you're right. A lot of it has been very cyclical. To your point, if it is starting to move to a macro environment, this gets very interesting quick, because obviously news is a big catalyst for that, but also how the traditional markets are tying into this. And of course, that plays into what you're saying around DATs and ETFs. I'm looking here at your Q3 earnings. Kudos to you guys. You guys generated a record-breaking almost $5 million in revenue, increased 568%, continuing to grow. Can you maintain this? I mean, this would be a really good thing for you guys if you can maintain it.
Yeah, I mean, it's obviously a little bit more challenging with the depressed crypto prices, because our revenue is denominated in ETH. With that said, I have to be somewhat cautious in what I say here. We're very optimistic about Q4. Like, if you just look at the publicly available information,
right,
80% of all of the capital we raised in the last 11 years came in Q3. So over that quarter, it didn't come the beginning of the quarter, it came throughout the quarter.
Okay.
And so that wasn't even fully deployed. So Q4 will be our first quarter with all of our capital fully deployed. And so even despite the pullback in the price of Ethereum, we're very optimistic about what could happen in Q4, and then really Q1 next year. If we're looking out, and I know it's a long way, but in public, if we're kind of doing things on a quarterly basis, there's a lot of new things that we've introduced. So this quarter we announced Ethereum. It's a whole new revenue stream in addition to our node ops, which is staking and block building. Right. So now we have a third revenue stream that's going to complement the other two. And as that gains steam, I think we're in a really unique position, especially compared to many of our peers.
Well, I think a lot of people don't realize that BTCS, one of the significant node operators out there in terms of operating for ETH transactions, which is a huge advantage for you guys, which gets into what you're doing around your ETH holdings itself, which continues to accelerate. And I think, to your point, this diversity that you're building into your revenue operations, this really sets you guys apart from a lot of other DAT companies for sure. So when you look at that and you look at an investor and they kind of look at DATs in general, they see BTCS and others, you guys have all these caveats that are beneficial to revenue generation. Do you think you're getting credit for that yet?
No, and I think a lot of people just don't know. I mean, the first thing is, a lot of people will look at our name and be like, it's a Bitcoin company, right? So we've kind of start there, even though it stands for blockchain technology consensus solutions, albeit a mouthful. What I think they don't realize, and we're starting to see this now that we're, we got into like the 200 million market cap range, we're above 100 million. We're getting institutions that will look at us and say, okay, this isn't a $30 million market cap company. We can actually have a look at it. There's liquidity. Yeah. And when we're having those discussions, they're like, oh, you mean you don't just go buy ETH and hold it? And it's like, no, they're like, oh, you don't just go give it to Figment or Blockdaemon or Galaxy to manage for you. Like, no, we don't do that. Like, all of the operations are internal, and we're building those out to be complementary to each other. And so I think that's where we've got a big head start, is that we've got a whole, we're building in the Ethereum digital ecosystem to generate scalable revenue growth.
That's interesting, because when I analyze this, if you guys want to, you can do this yourself. Just jump over to Strategic ETH Reserve. And if you go over here to this MNAV section, I want to showcase something here for you, because I think it's kind of patting you guys on the back, is that right now you've got one of the lowest out there in terms of MNAVs in comparison, at least in the ability to bounce. If we get a recovery here, which I think we might, this may be one of the best buys out there in terms of a digital asset treasury, with all the things that you guys have going for you, for sure. So you guys pay attention, because I think we're going to see more of them. And look at this data right here. This I wanted to show you. This is ETH exceeding Bitcoin in terms of treasury companies by share of supply. So look at this growth here. Do you feel like we're going to see a dynamic shift here now onto Ethereum as the narrative for crypto as opposed to Bitcoin being the narrative?
I do, and there's a few reasons. One, the Ethereum has two kind of advantages, right? One is utility. Bitcoin really doesn't have a lot of utility compared to Ethereum in terms of being able to build stable coins on top of it, like Tether.
Yep.
Two, from a price perspective, I know ETH is down, but if you look from like 2016 on, Ethereum is substantially outperformed Bitcoin. So if you take it from a utility standpoint and performance standpoint, it's done better. And then it's a yield, you can generate revenue in a digital economy on it. So if you're saying, hey, I'm going to throw some Bitcoin on my balance sheet and I hope my stock's going to go up, that's not really going to work. Like, that game's been played.
Yep.
And Michael Saylor is obviously the king of, the king of the hill in terms of doing this at scale.
Mm-hmm.
But there's no way for him to really generate revenue off of his Bitcoin. He needs to, slice and dice his cap table in order to, raise more funds to increase his Bitcoin supply.
Yeah, and I think this is one of the things that is the knock on what MicroStrategy has been able to do, and also maybe why we've seen the market kind of correct, even though Bitcoin, of course, has been in a precarious situation as well. If you guys have not checked out BTCS, I want you to go over their website and go to /investors, because I know there's a lot of people that are looking into DATs right now, and I'd look at their investor presentation. Because it's very comprehensive on how everything is done within BTCS. So you guys do a great job on educating investors. We're at a point right now, Charles, and I'm wondering, when you look at Wall Street as it is, back to your point earlier, where institution is starting to look at this, what about high net worth individuals, family offices, what we're seeing now with a lot of the money managers? Are they starting to look at DATs as well?
They are, and I think it's more, the process starts with, should we have crypto? So if you take like a typical registered investment advisor, what are they going to tell their clients? And they really have to tell their clients at this point that, you need exposure to the three biggest themes so far in the century. So the first was the internet. You needed exposure back then. And hopefully you didn't buy pets.com, you bought something good. But you want exposure there. You want some exposure to AI, and you're going to want exposure to the blockchain technology. And so once you start looking at how do you do that, we'll skip AI and the internet, those are other companies can provide that exposure. You really have ETFs, which are a 1-for-1, or you can go on chain, or alternatively, hopefully we're a part of that discussion of, you should look at a public company that's going to drive scalable revenue and acquire and have more ETH and more growth than you otherwise would just holding the underlying asset. Yeah. And that's where our goal is to come into play, is that we can do, that the alpha in our stock should be driven by operations, not, hey, we just, we have 70,000 ETH that's worth, 100 million plus, right?
Exactly.
That's not,
yeah.
I mean, that's interesting, but it's not, I think investors want more than that, and that's what we're hoping to deliver. But institutions I've talked to are now starting to realize, especially in this regulatory environment, that it's pro crypto, that they're not going to get in trouble for having a piece, that they need anywhere from 1% to 5% of their portfolio allocation in crypto and blockchain based companies or exposure.
So it's just a matter of time before we start to see really big numbers starting to onboard, especially if we see a correction in the liquidity side of things going outside of, if we get back down to low rates. Obviously that's going to indicate a lot of potential movement here for the market. Other big news out there that I wanted to kind of get your opinion on, this was Aave launching their app. Aave, I know you guys are using it as a platform, so this of course kind of rises all, what is it? This rises tides for all.
Yeah, rising tide lifts all ships. Yeah. Yep.
So this is good for Aave. It's good for Ethereum. Is this good for companies like you who are leveraging this ecosystem for gains?
I think so, and this kind of comes back to what Aave does. I mean, I always say, like, imagine if you took a bank and fired all the people and closed all the brick and mortar stores, and you took that process and wrote it into code, and then put it on the internet so it was globally accessible. That's basically what Aave does. So adding an app is an additional way to drive adoption. Adding the ability to have other real world assets that can be, posted as collateral and borrow against. Think that could be your car, your house. It's not there yet, but I mean, this is where this is going, is that you basically eliminate all the middlemen. Right? If you think about how much money MasterCard and Visa make and American Express on like
big time
just processing a transaction, if you can start to disintermediate all of the, the banks, the credit card companies, escrow agents, et cetera, across the board, and more likely than not, a lot of these institutions will realize that this change is coming and they'll adopt the technology in the back end and just lower their fees a bit, but will keep their margins. It's really going to provide an amazing service for consumers, right? And for the global economy to be able to transact. I mean, just look at what Tether's done in terms of tokenizing the US dollars. The majority of that's on Ethereum. You now have countries that, like Argentina, where people are using tokenized dollars. So we're able to export our dollar, and others can transact in real time 24/7 with a currency that's much more stable than their local currency.
Well, and I think this also, people don't realize the early stage in which this is happening. We haven't really seen full tokenized asset movement yet. We haven't seen the amount of what could be a revolution around payments, which will get into the ETH ecosystem. If you look at just what's happening with Fusaka, this of course is another, this is getting ready to launch here in just a few weeks. And this is only going to accelerate the use. I know the fees will be lower. People would say, well, if you're a validator, fees are going to be lower. Well, it's like anything. Fees are lower, but transactions are higher, because you're going to start to open up an opportunity here. So it's really going to 10x transactions or more, and that is in the early days. Is this a good thing for you as a validator?
This is huge. I mean, the more that goes on chain, the more that gets built on ETH, it is amazing. Then I think what we're seeing now is it's a fire sale right now. There are macroeconomic events that are putting us in a risk off environment, and so the prices are depreciated. But if you just look at where the world is going, we had the U.S. dominates the pretty much the global economy, right? I think we're 25% of the dollars are 25% of like global GDP, right? It's like 60% of all financial transactions. So we've had 10 years of the various administrations trying to basically hold crypto down, right? Crypto's for illicit use. It doesn't serve a good purpose. The reality is that's not the truth. And so moving forward, we're barely close to 1 year into a new administration where we are 100% behind adopting blockchain. And the money is just starting to flow and the things are starting to get built, but nothing's really been fully deployed at scale on a global basis. And so I think there's a lot of room to grow over the coming years. And the best example is just go to the SEC's website. If you go there today, you'll see a promotional video from Paul Atkins on how we're going to tokenize securities, and
so
we're going to
bizarre.
This stuff's going to be tokenized on the blockchain, and we're pro innovation. If you just go, what is it, the Internet Machine or something, where you can go back and look at past websites. I think you go back a year and you'll see at the top of the website, the SEC's website, it was in bold red letters: "Beware of crypto scams. They'll take all your money." And it's completely night and day. And so I think when you have that kind of restart, it really is a beginning, as opposed to it's a complete start of all of these things that can happen.
Well, I think to your point is the potential here for kind of where the market is going is pretty crazy in terms of opportunity. I wanted to bring up a clip here because this is a question we get often, and that is, do digital asset treasuries need to trade in tandem with what the core asset is? Now, granted, you guys are a little bit different because you do so many other things that are revenue generating, but I want to play this clip from Tom Lee, and then I want to get your opinion on it. Let's take a look.
If I'm going to see money flow into Bitcoin or crypto treasuries, wouldn't it then come out of the actual pure play coin itself?
Not exactly, Scott. For instance, when BitMine has shareholders and institutional capital comes in, and JP Morgan, Invesco, BlackRock are buying big stakes, then that capital is then used to buy Ethereum. So it's actually going back into the ecosystem, but then it's going into a vehicle like BitMine that's actually a permanent holder. So in a way, a crypto treasury is actually a pretty attractive equity because there's an income component plus there's, of course, that ability to grow your Ethereum holdings per share.
So, I mean, there's Tom Lee. He's preaching your book in a way, and that is that you've got the ability to drive revenue that, of course, increases the revenue per share, which is a big deal for all investors going forward. What do you make of his analysis there? Do you agree with it?
I do. I mean, I think where he's right is there's all this institutional capital that doesn't have access to crypto, and so that's going to flow through the traditional rails, right? There may be hedge funds or family offices or large institutions that are not able to go into crypto, and so for them, but they can go into an equity. It's within their mandate. So I think it makes sense to have an equity wrapper around crypto. Right. Yeah. I think the bigger issue, though, and this is where I wonder, like at their size, they've been trading above their net asset value for quite some time when others weren't. Now I'm not so sure. I haven't looked today. I mean, it moves on a daily basis, but I think it's going to be very hard as there become more and more public wrappers around crypto to justify trading at a premium to what you have if all you do is hold the underlying, right? Because then you could go buy. Now the difference between a traditional, plain vanilla DAT and an ETF is an ETF's not going to be able to deploy all that capital into staking. They're going to need to keep more liquidity. They're not going to be able to put on leverage. There's a bunch of things they won't be able to do, even if they can, partially stake what they have. So there could be some advantages to a DAT there, but the question then is, okay, well, what's the equivalent of like expense ratio? What's the cost to run that entity? Yeah. And what you will find is now you've provided an arbitrage mechanism for institutions to go say, okay, well, I'll buy this and short that, and they'll just collapse the opportunity. So unless you have a compelling operations that are going to drive, scalable revenue and profit beyond just holding it and staking, you're kind of at risk to get ARB to NAV. That's my concern, especially if you're on the smaller side. And so the way around that, and this has been our view, is let's build a highly scalable business within the Ethereum ecosystem that benefits by integrating these core components, the block building, the node ops, and now the Imperium are DeFi efforts, where those things all collectively work together to drive a scalable revenue. Because that way, hopefully, the alpha in the stock will come from our operations, not, hey, we just bought hundreds of millions of dollars worth of ETH and we're holding it.
So Charles, I mean, because that sounds to me, based on what you're saying, is that we could see an unwind of some of these digital asset treasury companies, which means that could either be really good for companies like you, or it could also soften the DAT market. What do you think is going to happen there if we do see that unwind occur?
I don't see an unwind. Well, I see on X people post, well, this company's going to go bankrupt. Like, none of these companies are going to go, it's going to be really hard for any of them to go under because they've raised so much money. And their infrastructure is so small. So you took a biotech company with 3 people working at it, and you put $250 million or $500 million into it, and your operating cost goes up to $5 million, and you're generating what you're generating is maybe 15 or 10 or 15 million a year off your staked assets. Like, you have a profitable company, unless you do very risky things and over lever. You're pretty much the only risk you have is that you're just not going to trade well, and you're not going to be creating a lot of value for shareholders. But in terms of going under and being forced to sell, you don't get in a position where you're forced to sell unless you have a convertible note that is putting you in that position, or you have some other financial structure. You should be in a position where you could just sit there all day, unless you go just do something stupid, right? So I don't see anyone going away. I do see less money flowing to DATs unless they can do something. And the investors I talk to, they're really, they're trying to compare all these different DATs, and the differences at the margin are very small. I think we're very unique in that, like, when we start talking to people, like, we have serious operations and we're making an effort to grow those. And so over time, I think DATs are going to start getting smarter and thinking about how do they get
Yeah.
How do they deploy that capital to earn a higher IRR for their investors to drive revenue?
It's mirroring kind of your model. I mean, and I don't know that, would you even consider yourself a digital asset treasury company now? Because you have so many different, okay, all right.
We leaned into, we partially leaned into the narrative over the summer because we were a validator node operator and doing other things. And it's a hard business to explain, right? Explaining the block building is like, it's like, okay, do you have an hour? Unless someone's crypto native, I don't even know where to start because all the terminology, they just don't get. So you got to keep taking a step back and a step back. And all of a sudden it's like, okay, I need an hour or two to explain it. So it's not good for sound bites. It's not good for PowerPoint presentations.
Yeah.
It's a much harder model to explain. And so I think many will start looking to add some different flavors of operations.
Yeah, for sure. I want to get one more clip here because this is a big shift from one of the biggest investors in Wall Street. I think she's going to start moving toward Ethereum, which could mean other areas that will move other major investors into ETH. Let me play this from Cathie Wood.
That she made an argument that she was surprised about the success of stablecoins and how she believed that stablecoins to some degree could crowd out some of the Bitcoin trade because people are going to use stablecoins more for transactions and the like than she originally thought. She thought Bitcoin might be used more for transactions than they will be.
I'm not sure I see the users of stablecoin substituting that long-term asset for Bitcoin. And I'm not sure I see the people who want to buy Bitcoin as a unit of currency viewing a stablecoin as a surrogate for that. So I'm less confident
Andrew,
in that.
for you...
All right, so they were kind of going back and forth on the scenario of stablecoins being looked at, really more importantly, I think, as a utility asset, which is just utilizing Ethereum in terms of, the transaction layer, which I think is what she was talking about, is that the revenue generated, it's basically what she's saying, and ETH is going to be the winner here. It wasn't necessarily Bitcoin because of the use of stablecoins. Would you agree with that?
No, 100%. And it was funny watching that clip. Bitcoin is not a transactional asset. Nobody's like unless you add Lightning networks, which is we could debate how useful that is and how many people are using it. Nobody wants to spend an asset to buy things or use it as a currency if it's highly volatile or they believe it's going to go up a lot. It's like you don't buy Tesla stock and then go try to use it to pay for a cup of coffee, right? You just you don't sell it and then go pay for your coffee. And so I think that's where stablecoins really meet a need. And what you've done with what's happened with stablecoins is now as banks with the Clarity Act are able to, the Genius Act are able to go in and build their own stablecoins, it creates an amazing environment where there's going to be more tokenized dollars. It's great for the U.S. It's great for the economy. It's great for the American people. Where now you can transact in U.S. dollars globally 24/7. And that's just starting to get built. And that's, I think, really big for exporting the dollar. It's really big for other countries that want to, use the dollar that's otherwise harder to get. It's good for remittance markets. And so that's something we haven't really seen yet. I mean, I know stablecoins are very big for on-chain activities with crypto natives. If you're interacting with DeFi, that bridge to traditional markets isn't really there yet at scale. And so I think when that comes, there'll have to be a reason to use a stable coin beyond your credit card, right? Like why would I not use my Amex where I get all sorts of points and benefits to use a stable coin? Well, one is if I'm sending money to Europe, I wouldn't use it. Remittances are a great market. Or if I want to, I would use a stable coin if I got some benefits. And now that we have the Genius Act, I'm sure we're going to see JP Morgan coin and we're going to see Amazon will probably have its own tokenized dollar because you can cut out the credit card companies and you can build your own ecosystem and save billions. And it's legal, right? If you go back to when Facebook was trying to create Libra and the government was like, no, you can't do that. Now you can do that, right? So we haven't seen that really start yet at scale, but I think it's coming. And Tether's already huge. If you just look at most of the international scale where it's actually used. So, and all of that comes back to is built on Ethereum. And so for our perspective, we don't have to say, well, what stablecoin's going to make it or fail? what project's going to make it or fail.
Right.
As long as our bet is Ethereum going to be the number one
It's gonna be the
settlement
winner.
layer?
Yeah. Yeah. Which
And
it
it's not
is.
even the winner. There could be
Yeah.
it already is, right? There could be multiple settlement layers, right? I don't think, Solana doesn't have to go away for Ethereum to be number.
Exactly.
Number,
Yeah. There's going to be multiple
room
chains.
for
It's a
all.
multi-chain world. Everybody's been talking about this
Exactly.
for quite some time. It's just that right now ETH is pretty much in the lead position, which first mover advantage usually at the time of critical mass adoption can be very, very interesting. So that's why we're watching it, of course. Charles Allen, great to have you on the show. Thank you so much for coming in today. We appreciate it.
Yep. Thank you so much for having me.
You bet. All right, you guys know what to do. If you're not in our Diamond Circle, that's our own private group that you can join for absolutely free. It's where we drop a lot of additional research. We do all sorts of things over there that you guys can get access to. All you have to do is click the link down below. And of course, follow me out there on X, @Paul Barron. We'll catch you next time right here on The Paul Barron Show.